Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for July 22nd to July 26th for the majors for euro dollar, dollar yen, and pound dollar. The big question in front of us this week is going to be, could euro crack this week? We are at very key support levels across a variety of crosses in the euro and most importantly the euro dollar itself. On the levels themselves, the euro pretty much finds itself right at the bottom of this 113, 112 range. It's been able to fight off the 112 support. It's been able actually to hold the 112 support, fight off the 112 runs for the last couple of days. But the pressure is starting to grow to the downside. We do have event risk this week with the ECB presser, and that should be a very interesting event this week. It's going to be the seminal event, I think, as far as trading goes, into what otherwise is going to be essentially a very lackluster summer week. Dollar yen also looking very vulnerable here. This 107 got run a couple of times this week, held. Remember we had the spike lows at 106.50, then we ran back up. A 109 is the big range resistance. We're essentially trapped in this 107, 109 range. I think the market is clearly waiting for the FOMC at the end of the month. And more importantly, at this point, I think the conventional wisdom, pretty much the consensus, is that we're going to go to 25 basis points. But the bigger open question is that just simply an opening gambit to further rate cuts before the end of the year? And should that happen, I think the pressure on the dollar yen comes down back to 107, perhaps even all the way down to the 105. The market just is not reacting well to any kind of positive U.S. news, and that suggests the market is really skewed to the downside on dollar yen for the time being. And cable basically bottoming out here in the 24s, kind of holding bid here. This 124 is the support. Cable to me, I think, could be a relative bid story going forward. Data has been surprisingly robust last week in terms of still performing much better than you would think given the Brexit conditions. Yes, the political situation is a complete mess, but I think the market at this point is less worried about the Brexit story for the time being, and on a relative basis is probably going to rebid cable on the assumption that some sort of backdoor deal is going to be worked out between now and the October deadline. On the calendar this week, it's a relatively light calendar. The U.S. side pretty much has nothing. We have housing data front of the week, and then we have the GDP data at the end of the week. This is the second quarter. We're bearish, the data set, because retail sales and trade were weaker. So there's a little bit of a slowdown. That, of course, provides more impetus for the argument the Fed has scoped to cut here. On the European side, that's really going to be the core data set that we have this week, which is we have the flash PMI numbers. This is the end of the month flash PMI numbers. So I think this is, I wonder if there's I'm sorry, I take it back. These are the preliminary numbers, which means this is really the latest data set. And it should be very interesting because if they come in weak in front of the ECB presser, which is going to be on Thursday, that really just simply adds fuel to the fire of a potential rate cut or some sort of a easing action by the ECB. So the market is very concerned about that and looking forward to see if the ECB is going to guide lower and try to create some sort of an easing function out of its policy meeting. So here, this is why the euro becomes so vulnerable, I think, to the downside. Let's take a look at the charts here and see where we're at. So first and foremost, we got rejected off the SMAs. Basically, right now, when you look at euro on a clean basis, it's a 12 to 13 range, right? 112 to the bottom, 13 to the top. We've held 12 quite a long time. This is very impressive that we held support here. But the bigger question going forward is that going to just crack right here? And if we do crack the 12, it quickly opens up 1150, which is the next level of support here. And then right after that, the 111, if the ECB is indeed super dovish, which it may very well be. At this point, we're still preserving the higher lows uptrend move, but just barely. And that's going to be, I think, the really important thing to watch here. How well or how poorly we trade around the 112 level, because I think once that level goes and holds it, more importantly, sort of if we close below the 112 level on a daily basis, that really sends, I think, a much stronger signal next week that the euro is ready to crack further down to the 111 on additional easing that is going to come into the ECB. Pound, on the other hand, looks a lot more constructive after several weeks of really horrible sell-offs. we've sort of now made a series of lows that appear to be holding, especially this 124 low. It's a clear double bottom here. We did retrace a little bit today, but and of course there was also, as I record this now on Friday afternoon in New York, there was all this news about the Iranians seizing a UK ship, no UK citizens on that particular ship in the Strait of Hormuz, but a UK registered ship. That I think is going to be a 10% teapot. It's really not going to have a much impact as far as escalation goes. I mean, you never know. Geopolitics is always unpredictable, so you could have a much greater escalation of hostility, at which point it makes pound even more vulnerable. But assuming that's sort of a mild nagging event, the critical thing with cable is going to be this 125.50 area. If we close through that, it opens us up to basically a close above the SMA, puts us in a much, much better technical position for a full run back up towards the 128s. Overall, cable still looks to me as a relative bid trade after being so many weeks of being a relative weakness trade. And we'll talk about that in the cross as we get to that section. And finally, here's the yen story. The yen story still very much a 107, 109 range. Today's price action does provide a little bit of relief for the bulls who got shellacked yesterday off of the Williams comments, and where we broke the 107.50s. It came very, very close to testing the support. Still, this 106.50, that's the key level. That level has been holding. We are essentially in position to hold higher lows at this point. But really, you need to see 108, a closing basis above the 108 to give the bulls a little bit of comfort that the worst is behind us and that we're moving higher. At this point, it really becomes an open question. As I said, the market is just not loving the Fed position. The Fed position seems to be, we're going to cut more than less. And if you get weak U.S. data by the end of this week into this Fed position, it's hard to see this trade get relative bid. So I think you need to be very, very cautious here. I'd like to see the price action close above the 108s through the SMA in order to really get comfortable with the long. But at the same time, the shorts are just not there yet because we are holding bottom, and it's essentially a range trade. So there's little real clear direction in dollar yen for the time being. It's a lower end range trade as we start the week. Wish you guys the best luck, the best trading. Boris, over and out.